One of the biggest myths in real estate investing is that if you have low credit, you won't be able to qualify for a loan. Well, I'm here to tell you that you can still qualify, but it could impact what your interest rate is. In a high interest rate market, as it is today, any savings could have a huge impact on your real estate investing portfolio. Hey everyone, I'm Christian Bachelder, co-host of Mortgage Mondays. In today's video, I'm going to be debunking a couple myths with credit, giving you advice on how to keep your credit high, and also giving you guys some tricks on how to monitor and maintain that credit while you build up towards your next investment purchase. So make sure you listen all the way through here today. I'm going to give a lot of good tips, a lot of good tools, a lot of good resources, starting with our sponsor today, RentRedi. Imagine your tenants paying rent on time and building their credit at the same time. RentRedi makes it super easy for tenants to build their credit just by paying their rent. Here's how it works. With RentRedi, every on-time rent payment gets reported to all three major credit bureaus. That means that good financial habits can help build a solid credit history. By offering credit reporting, you can attract responsible tenants who are eager to boost their credit score. It's a win-win. RentRedi's credit reporting is hassle-free and integrated directly into their easy-to-use app. So when you're a tenant looking to improve your credit, or if you're a landlord aiming to provide added value, RentRedi has your back. Visit rentredi.com to learn more. That's rentredi.com. The basic concept of credit score is it's kind of a tricky one though, right? Most people think, oh, I need 800 credit to have a good score. That's not necessarily true. Your credit's not just a number, right? It's not just good, bad, average, right? We have brackets that us in the lending industry understand as good, bad, or average, but it's really a key factor that helps a lender identify what your credit worthiness is. And I wish I could very clearly lay out the explanation of how the credit score is calculated based on your payment history, based on the number of accounts you have, based on the time that you've held those accounts. All those things do go into it, but there's not a publicly available like math equation, right? Where this many accounts gives you this score and this payment history gives you this score. It's really an algorithm that somebody much smarter than me figured out. But the idea is it takes all of your history that reports to credit bureaus. So that could be mortgage payments, credit cards, student loans, car loans, any personal loans, right? Anything that a creditor, so that's a lender, would care about reporting to other creditors regarding your payment history. When you go to get a new line of credit, it allows for me as a new creditor to you to look into your past a little bit and get a general consensus from the other creditors that have issued you lines of credit, how your credit worthiness is. And it can really impact the terms of the offer that you're given. It could impact your interest rate on your mortgage. It could impact your interest rate on your credit cards, on your car loans, on all those things that I just discussed. It could have a fairly significant impact. Now, are you not going to get a good rate unless you have an 800 credit score? That's a bit of a myth. But most lending factors get broken down into ranges, okay? And if you find yourself on the lower range, let's say in the low 600s, versus the higher range, which is high 700s to low 800s, I mean, you're talking about a really significant savings on your mortgage. Where people get it wrong is like, if I don't have an 800 and I fall to a 799, my rate's going to be terrible. That's not true. But if you're comparing a 150 point difference on your credit, absolutely there's going to be a difference. So if I'm just breaking it down, for instance, if you're looking at the same loan product at 650 versus 800 score, I mean, you could potentially be like 1.5% difference in the rate. Like it could be that significant. That's the difference between a 6.5 and an 8. That's literally depending on your loan amount. Let's just say for an example, we have a $500,000 loan getting towards the average size loan in America on a 30-year loan. That could be a $200,000 difference if you hold that loan to maturity, over $200,000. But that's $200,000 more that you could potentially be paying in interest over that 30-year lifetime of your loan. I mean, that's $200,000. That's 3-4 years of salary for the normal American household. Obviously, the questions should lead into, how can I improve my score? What factors should I pay attention to more? And that's where ultimately, guys, the guidance and experience of a loan officer that understands credit, that knows how to rescore you, that knows how to fine tune that credit with you, not necessarily in your everyday life, but when you're starting to think about getting a line of credit, that could be a mortgage, a car loan, anything like that. If you consult with somebody, you get a little peek behind the curtains of their understanding on how these numbers, these FICO scores, TransUnion, Experian, Equifax, the normal American doesn't really understand these things. But if you reach out to one of your financial guides that should be in your core four, as David calls it, or your network, they're going to be able to guide you effectively towards getting you in the upper tier of that credit bracket so that you can ultimately save more money on the interest on any loan you get. If you're somebody right now whose credit is below 620, maybe even in the 500s, don't worry, because there's a lot of things that you could do to be improving your credit. As I said, reach out to a loan officer. We may be able to advise you on which of your debts to start paying off more aggressively first. You may be prioritizing the wrong debt, right? We want to pay off the one that has the biggest impact on your score. You may be prioritizing an installment loan instead of a credit card, where that credit card is going to have the bigger impact on your credit score. There's also a lot of financial institutions that help you with rescoring, whether it's arguing inaccuracies on your credit report or getting creditors to forgive credit mishaps, right? Late payments, things like that. There's a lot that you can do. And on top of that, really, really cool service from the sponsors of our show today, RentRedi, is you can improve your credit score just by paying your rent. People always like to say rent's throwing away money. If that's your case, you could say goodbye to throwing away your money on rent every month, because RentRedi now attaches your rent payments to your credit score, right? Rents never get reported to credit score usually, but our sponsors here got a really cool system that they can do that. We've talked about how it benefits you as a tenant. It benefits you as a landlord because you can offer this. It's almost like a free service. You offer credit building to your tenants by running your tenant's credit when they sign up with you, as well as allowing their rent payments to be credited to them as a positive history on their credit report. Win-win for both sides. Landlords win, attracting better tenants. Tenants win, building credit for successfully paying their mortgage, eventually scaling them up to potentially being in position to buy a house. Win-win for both sides. If you guys are interested in how to access this really cool service, either as a landlord or as a tenant, you can always find our partners over at rentredi.com/credit boosting. That's rentredi.com/credit boosting. And once again, that's for reporting your rent payments on your credit score and improving your score for properly paying your rent. Beyond that, guys, obviously keeping your card balances low is a really big one. Okay. So if you do have credit cards or any type of open lines of credit, one of the biggest impacts, not just your payment history related, but is your history of how much of that line of credit you're using. If your credit card has a $10,000 balance and every month you're capping out at like a $9,900, balance owed, you want to be careful with that. That really negatively impacts you. The lenders want to see that you use your credit, but you don't max it out, because that's a red flag that there may be some signs of some financial hardship there, and that would negatively impact you. And lastly, guys, just with monitoring your credit, there's a lot of services out there. I personally use my own bank. My bank has a little portal where it has some general credit monitoring. There's a lot of things out there. I know there's ads and, commercials and everything. Ultimately, though, any of these quote unquote free services online, they're a good thing to keep an eye on. Sometimes they'll notify you, of a late payment or if something negative reported to your credit, but ultimately they should not be treated as like hard facts. Okay. I can't tell you how many times that somebody said my ex credit provider told me that I have an 800 credit score, and I pull their credit, a true bona fide, tri-merge FICO poll that lenders lend on, and it's 650. So it's like 150 point difference. And those borrowers were expecting, the rates that they see online for somebody with 800 credit. I'm not saying it's always like that. A lot of people pull their free credit score online and it's accurate. Just be careful, because a lot of those services pull the general database of information on your payoff, on your debts and your payment accounts. And it doesn't always capture everything. I mean, I've had people show me credit scores that don't capture like a bankruptcy they had. And of course mine is going to. Bankruptcies are the biggest thing that you can have happen to you on your credit score. So just keep in mind, guys, they're really good tools and services to help you monitor your general financial standing. But if you're actually trying to tie something to an offer you're going to be getting, or plan on an offer that you're pursuing in financing, like a loan, like a car, like a student loan, like a credit card, you got to know for sure, which is why you should have the advice and guidance of somebody who does this, who understands credit and who knows how to quote you based on what's actually happening in your financial story, not a guess from a free service online. And kind of wrapping this all together, now we've kind of talked about what is credit. We've talked about what impacts it. We've talked about ways that you can either monitor or reporting. We've talked about all these things that you can do to kind of keep yourself in good financial standing credit-wise. But I also just want to mention, guys, let's talk about when you do need to change something. So you've confided in the advice of a loan officer. He's let you know that your 800 score is actually a 650. How do you fix that? And credit improving is really broken down into two buckets. There's credit rescoring and what I call credit fine tuning. And to understand how both of these could be beneficial to you, you need to understand how credit brackets work in lending. And I'll be super quick here, guys. Basically, the general rule is every 20 points that you go up. So 600 to 620, 620 to 640, 640 to 660. The general rule is every single one of those gets marginally better offers than the one before. So if you have a 645 FICO, you're going to get a better offer than a 639 FICO score, because that 640 bucket is the next one up. When you go bucket to bucket, it's not a huge benefit, but if you're going from 650 to 800, obviously you're skipping through 6 or 7 buckets. That's going to be a significant impact to your credit score. Now, there are some buckets that impact you better than others. So for instance, if you, the listener, came to me as a mortgage broker looking for a loan right now, and I pull your credit and you're at a 699, you don't need a huge, big change. You need to get up by 1 point, because you need to get into that 700 bracket that happens to be one of the largest pricing differences in terms of brackets of these 20 points. So what I would do is that I would not need to do a whole bunch of like credit rescore and like, you pay down a bunch of debts and do all, go fight a late payment or something, all that really hard credit reworking that a lot of companies offer. I would just do some fine tuning. And that could literally look as simple as, let's say you have 3 credit cards and one of them has a $100 balance. I may say, hey, can you get that balance to $90? So literally pay your American Express down by $10. And I have my little algorithm on my system that tells me that should give you a 1 point increase. Now that could be a $10, $100, $1,000. Obviously, each one of those are going to be unique and different based on your situation. But that's what I refer to as fine tuning. It's literally paying the minimum amount possible to get a small impact to push you over a certain threshold, whether that's 700, 720, 740, whatever that next bracket is. If you're close enough to justify the work it takes, the work could literally be pay down your credit card by $100. And by doing that, you could potentially save thousands of dollars on your mortgage, not only in terms of payments over the whole 30 years, but even in terms of closing costs, because your closing costs will go down if you have higher credit. So really important stuff, guys. If you guys ever see that your credit is on the verge of one of those 20-point brackets, ask your loan officer, hey, what would it take to get that to 720? How much money would I save? Oh, I'd like to do that. Do you know what it would take to happen? That's definitely starting a good conversation and proves that you've been watching your stuff and doing your homework. Your loan officer would appreciate you for that, because they can offer you a better quote. That about does it for us today, guys. Covered a lot of good things on the fundamentals of your credit score. Obviously, how to keep it high, how to benefit both as a landlord and a tenant, and ultimately get the best deal, not only on your mortgage, but on any financial product that you're searching for. I hope this video gets you guys started, not only to improve your credit score, but to keep it high and getting the best interest rates that you can. Be sure to like this video, guys. Subscribe to the channel if you want to get more videos like this on your feed. Appreciate you guys. This has been Christian Bachelder signing off. Have a good one.